All right. All right. So today is 12/19/2022. 3 for 3 in the morning. Beautiful morning. Green trades, green Discord. Everyone is a winner today. So happy about that. We're going to get into a topic here that's absolutely critical for your success in the market, for you to be successful in the market. Any trader that is looking to be um, just a monster in the market is going to have what we call an edge. You're gonna it's invaluable. You have to have an edge. So our discussion today centers around an edge, leaning into your edge, leaning into your edge. And I thought, I've talked with so many traders and coached so many traders and helped so many traders, and I do live trading, and you guys are seeing me trade, and you know, and we're going to talk to this live as well. So um, this is our Mindset Mondays, where for those of you guys listen to this for the first time, we do a Mindset Monday audio training that makes it to our podcast as well, and it's designed to help you with the mental side of trading. Why? Because quite frankly, you can learn every technical setup, but if you don't work on your mind, if you don't work on the mental side of trading, which is the most difficult side, ultimately you're going to fail. Now, you don't have to take it from me. You don't have to, listen to me. You can research it. You can listen to other great traders. You can talk to some of the top traders in the world, some of the top training experts in the world in trading, that is, and they'll tell you, right? In fact, did you know that most of your Wall Street firms or your desks, your trading desks, not just on Wall Street, but I'm talking international. Did you know that they pay big money to have trading coaches and uh, you know individuals come in to teach trading psychology? In fact, Mark Douglas is mostly known for developing traders their mental side of things. He's not known, if we're being honest here, and you can give me some feedback and let me know. He's not known for being an incredible trader, is he? Is he known for just executing trades that's just incredible and just racking up a bunch of wins? And people are like, man, I could just see this guy's portfolio. No, he's not Paul Tudor Jones, is he? He's not Warren Buffett, right? He's known for training people. You really don't know if he can trade or not, do you? Do you? Well, this is not a discredit at all, right? I've got his books. I read the books and everything, and it's absolutely invaluable information. But I'm making a point that professionals pay for development, and any trading firm will pay to bring a trading development coach to talk about trading psychology. They'll bring them in to the firm, and they'll go through series of trainings with those who are the day traders there. Now, why do they do that? What's the purpose? Is it just to make them a better trader? Yes, that's true. Is that coach, and I go back to Mark Douglas, is that coach teaching them technical skills? No, no. The company's got that locked up. They've got algorithms, they've got quants, they've got analysts, they've got it locked. They know the setups. What are they teaching? Where they're teaching them how to master the mental side to develop an edge. So that's what the Mindset Mondays discussion is. It's the trading psychology, developmental side of trading to help you develop an edge. You can listen to it in your car later on all podcasting platforms, and you can come to the Discord. It's in our audio training for the Killer Whales only right now, and to give you what you need, right? And it actually is a composite of not just my expertise, but others that I have learned from, and other traders as well. We have traders here inside the Discord that we bring on, and some who are just learning, some who have gotten better, gone through the different trainings, and can add value. So let's get into it. Leaning into your edge. The first thing we want to identify is what's an edge. And then you certainly can give me feedback if you're inside the Killer Wells channel. What's an edge? What would you consider an edge? Well, I'll tell you what I consider an edge once I see you responding there. But what would you, if you're listening to this, just think, what would you consider an edge for trading in the market? All right, so some folks are saying an advantage. I like that. Got my tea here, just sipping on my tea as we chill. Particular style of trading that gives you confidence. Could be a setup or something like that. All right. Strategy. Some folks are saying a strategy. Okay. All right. What works for you the majority of the time. All right. So an edge, you could really define an edge as one word, and it could just be a strength. It could be your strength. So as you listen to this, I want you to think right now. Let's do a quick exercise together. We're just going to do a quick exercise in the Discord, and if you're listening to this later, just call it out. Everybody, right now, don't even think. Right now, quickly. What's your strength in the market? One word. What's your strength, or one sentence, or one phrase? What's your strength in the market? Put it inside the chat. If you're listening to this and you can't write it down, just think to yourself, what's my strength? Like, what do I absolutely rock at? What have I developed? And if you have trouble answering that, therein lies the problem, right? So your edge is simply, as it relates to the market, at the very core, it's your strength. It's something that you are extremely strong or good at, and it directly impacts your trading. All right. So what can we say could be a strength? What could we say could be a strength? Well, for example, it could be patience. That could be a strength. Reading the market, that could be a strength. Entries, exits, those could be strengths. Trading in certain time frames and sticking to that, that could be strengths. Maybe you're so disciplined you only follow a certain rule set and you never break it. You're very disciplined. That's a strength. Perhaps you only trade a specific setup or group of setups. That's a strength. Maybe you rock at breakouts or breakdowns. That's a strength. Perhaps you have a very clear understanding of how to read volume. That's a strength. Maybe you understand volatility. That's a strength. Maybe you understand price action, reading it. That's a strength. Or perhaps you've taken my training and you also understand how all three VVP tie together for the market. That is an elite strength. Maybe you're a good data researcher and you uncover different things that pertain to market sentiment. That's a strength. Maybe when you're in the red, you're known for, or developed a pattern of being able to pull yourself out of the red, even when you take a bad trade, or even when your trade goes against you, and you still end the day green. You've got perseverance. That's a strength. That's a strength. Your ability to recover from a red session. Maybe you rock at trading the open. Maybe you crush the close. I mean, the list goes on. The list goes on. Those are some examples of what we develop in traders. Number one, all of those are things that we develop in traders in this Discord with the Wealth Wells, but it's something that can be called a strength. Now, the idea here is to take your strength and to lean into it, or lean into your edge. What does it mean? It means to highlight and take setups and or opportunities in the market that feed heavily into your strength. Heavily. So what do we mean? All right, we'll take a very simple one. Let's say your strength is you're having success in the open. Well, this is where you would really want to dial in. Maybe your size is there. Your position size management is a little larger at that time. Your confidence is higher. Your ability to read the market, whatever it is, whatever it is, whatever it is. But the idea here is that you want to lean into that. All right. Now, here's a question. How do you develop an edge? How do you develop your edge in the market? And what do you do for that? Well, if you're going to develop an edge, you know, it's going to take tons of practice. Flat out, you've just got to get your reps in, and it's going to take tons of practice. Now, the first thing you want to do to develop an edge is what I teach many traders to do. We've done it inside the Killer Wells. We've done it in one-on-ones. It's also discussed in my book. It's also discussed in some other setups and some training that I have for just my favorite setups and then best practices. It's called a SWOT assessment. SWOT assessment, right? Does anybody know? Have you ever heard of a SWOT assessment? Well, if you have, then you understand its goal. So a SWOT assessment: strengths, weaknesses, opportunities, threats. Strengths, weaknesses, opportunities, threats. It is a clear list of who you are as a person and as it pertains to the market as a trader. So many times when I'm working with traders, when I'm developing traders, even when I try to, when I put a trade plan together, they have to have had or have done a SWOT assessment. Got to do a SWOT assessment. Got to know who you are, and I need you to know who you are. Right now, starting out, everybody has a strength. Everybody has, even if you don't know anything about the market, there's something that we can highlight. Now, the caveat is we need to develop strengths that strictly pertain to the market. You can say something like, "Yeah, I'm very good at entering and exiting, um, you know, when I'm calm, when I'm calm," and that's a strength. But we need more than just being calm. We're going to need to also layer in some technicals in there as well, and then we're going to have to layer in some mentals. So everybody has a strength, and we can just highlight it. But the purpose of a SWOT is to break down so you can visually see what you're good at. Now, why are we talking about this? Well, we're going into detail about this because many traders give me 1 second here. Okay, just had to check the market there. All right, many traders, um, you know, they don't have a clear view, a clear picture of what type of trader they are. So if you don't understand the type of trader you are, if you don't understand your strength and your weaknesses, how can you improve? So you've heard me say the phrase, what gets measured gets improved. So the idea here is to get a clear picture of who you are as a trader, not just what you need to work on, but what you absolutely rock at. And then we lean into those strengths. All right. How do you do it? First thing we're going to do is a SWOT. After that, we're going to put a trade plan together and have tons and tons of practice. I mean, you're going to practice so much, you're going to dream about the market. You're going to dream about it. You're going to dream about it. All right. So Tay is saying, I want to increase my span awareness. Where are we in the market? Okay. Yep. That can be a strength. So that's market awareness. That's market sentiment, understanding where we are. Some of you guys are saying emotions. Some of you guys, some of your strengths are trading key levels, your mental. Some of you guys are saying entries, price action, your strategy. You have to be more specific on that one. What works for you the majority of the time? Yep, yep. Okay, you mean that's your strength? Okay, absolutely, absolutely. So the idea here is to develop it. You've got to know what it is. You got to have a plan, and you got to practice it. Right? You got to practice it. So let's get an idea here. Let's say, for example, your strength is your entries. Your entries, right? You're going to have to break down and define how that relates to the market and why that's your strength. So, for example, you don't want to just say it's my strength because you get good entries. It's a result of something. It's a result of you reading the proper volume. It's a result of you trading a proper time frame. It's a result of you trading at the right time, entering at the right time, a key level, and etc. So, what you can do is you list that down, what makes up that strength, and then we can mind map it. We can tie in other things that come from it. Like getting a good entry, you have to have a good level. You have to understand where you're going. You have to be aware of market sentiment. So that's also a strength. And we start to build from there. So the idea is a plan of action and a roadmap. So if you're listening to this, at a later time, first do a SWOT assessment. What are my strengths? What are my weaknesses? What opportunities can both of these, specifically my strength, arise or give me, right? And then what's the threats? If I fall back on my weaknesses, what can happen? Now, don't just say I lose money. Don't just say that. You have to say to yourself, all right, I have a weakness. So we'll use this as an example. I've got a weakness. Let's say you say I've got a weakness of poor entries, right? Poor entries. Okay. Well, what does a poor entry look like? What does a poor entry look like? Well, it means that you did not get in your trade at the right time. But more importantly, if you're trading in the wealth wells, you didn't follow your trade plan. VVP is not there. Price level. There's other metrics there. So now, what will it cost you? What's the threat? Well, obviously, it's going to cost you capital. But you write down what the trade when you go and you rush into a trade and you don't get a right entry mentally. What does it cost you? Mental capital for sure. Not just money, right? Messing up your win percentage, all kind of things. It's going against you, right? So you have to. I'm helping you to drill down a little deeper and really write out what your strengths are, what your weaknesses are, and how it's going to affect you. All right. When you write all of that out, you will have a clear picture of really who you are as a trader. You're going to see yourself a little bit clearer, a little bit better. All right. So after you do that, then you can start to say, all right, if the entries are my strength, let's lean into that. Let's lean into that. This means that uh, when you trade and you're watching key levels, because that's what we teach in the wealth wells, we've got a number of things that we use. I'm not a supply and demand zone trader. I don't pattern trade lagging indicators. I use a system called VVP, right? And when these things align, you take the trade. When these things align, take the trade. Why? Because you've already and you're consistently developing your strength. And the only way to go to the next level is to trust your strength and develop it. That's the only way. I'm not saying just jump into a trade blindly. I'm saying you've worked at it. So when you see these things align and you're working on, for example, entries, just take the trade. You see everything is lining up. Let the trade relax, give the trade time to work out. That's your strength. All right. So for example, let's say your strength is understanding market sentiment and maybe you haven't ironed out entries and exits. Then you're going to have to allow the trade more time to relax. Maybe you rocket swings. Maybe you just have trouble identifying your targets throughout the day and you need to work on that. Okay, great. That's a weakness. We'll work on it. But perhaps you usually are correct. Has it ever happened to you? You're like, man, I knew we were going there. We just didn't get there immediately. We didn't get there that day. But overall, you're typically correct with sentiment. That's a strength. That's a strength. Then what you have to do is lean into it and fine tune it, right? So how do you do that? Well, let's say your strength is market sentiment and you've got a target. Then cut your target in half. Cut your target. Let's say, for example, you said, all right, well, I think we're going to 3,800 on the futures or SPX, that is. And we start the day, somewhere around 38.50. So you got 50 points to move. Well, why not have your target at 38.25? Just get your target and quiet as kept. I mean, today is 12/19/2022. It's 12/34. And where's SPX sitting right now? 38.25, right? So, so that'd be a good area to what? Reduce your risk, maybe close your position or scale out, something like that. So that you can protect yourself a little bit. So if your strength is you understand market sentiment, then perhaps move your target up a little bit and then let your runners run. But the first thing we got to do is help you see what your strength is and develop the edge. So we could talk about the edge and a million times. I mean, a million for hours, right? We can give a bunch of examples. But I'm going to give you 7 things, 7 tips to help you lean into your strengths to be a better trader. 7 tips to help you lean into it. And we've talked about a few, but we're going to really highlight them. All right. 7 tips. Okay. So no matter what your edge is, as we talked about, patience, discipline, reading the tape, whatever, all that stuff, list goes on. 7 tips that's going to help you lean into your strengths to be a better trader. All right. Are you ready? Okay. Here we go. Number 1, you have to complete a SWOT assessment and be honest. You don't know what kind of trader you are until you see it on paper. Now, I'll hit you with a side point, and we'll talk about this at another time. That SWOT assessment is also going to help you and I build a trade identity for you. You need to know what type of trader you are. Because the reality is everybody's not a day trader. You got a lot of swing traders out there masquerading as day traders. They're not day traders. And that's okay. There's nothing wrong with that. That's okay. But you do have to understand what type of trader you are, because you get chopped up in the market if you don't understand who you are. Right. I had one trader, so I don't know if it was earlier in this year or last year, say to me, "Well, I can't play puts. I can't play puts." And the trader just had an inability to read the market. They didn't understand where we're going. Right. Now, coincidentally, they didn't stick around long enough in the Discord to really develop that. They weren't the type of person to put that work in. Or this didn't suit them. That's fine. But either way, you don't know what type of person you are until you write it down. So number one, complete a SWOT assessment. All right. Number two, as you do that, once you're done, highlight and detail the strength. Highlight and detail. Don't just write down I'm good at entries, but what makes up a good entry, right? Your ability to read the market, right? Key levels, volume is present. You guys love when I get into a trade and I say to yourself, I'm looking for a rush of volume. We're going to need a pop to get past this area. Then I get into the trade and we get a pop immediately. You like that, right? You like that. You like us to move into profit immediately, don't you? Those are some of the best trades, aren't they? That's a strength of mine. One of my strengths is being able to read volume, use the VVP system, look over at the tape, analyze the data as I've shown in training 4 and 4.5, and then make a decision right at the right time, boom, for us to get into profit. I love that. I don't want to wait. I love it, right? Happens often. That's a strength. Now, how was I able to develop that strength? Well, for one, I highlighted, all right, it started with having good entries, but then I broke down what is a good entry? What is the process I use for getting a good entry? Okay, let me see here. I'm looking at my levels. I'm looking at volume. I'm looking at the tape. All right. I got VVP working. All right. So now once you break it down, you start to work on all those sub points. Okay, let me go back to the drawing board. Let me re-verify my levels. Since that's a strength, since that's a component of a strength, I got to make sure this is right. So what is that going to do? That's going to help you with your levels now. Okay, cool. Let me go ahead and do a deep dive on volume here. Let me really make sure I go through my step system to check all components of volume. Volume. I'm really looking around. Volume. Do I have the volume? And if I don't have the volume, nope. Why? Because my strength is getting into a trade at the right time for the pop so I can get immediately into profit. And I have sub points that tie to this strength that I have to work on. And so I work on all of those things. And so how do I know that? I've written it down. I've done a SWOT assessment over and over and over, and I've worked on all those sub points. So highlight and detail the strength. That's number two. Number three, then you're going to, in the same sentence, dissect it. What makes this your strength? Right. So here we're doing a little bit of a confidence builder too. You're going to write down how long this has been your strength, and it needs to be things that relate to the market, right? Dissect it. All right. So, hey, in the last month, you want to write it down. I've been rocking at this, and I've been doing these 4 things that have equaled this strength. Now, you can't write something down like I'm good with the kids. Okay. You can't, it needs to relate to the market. All right. You can't write something down like, I'm a good, my hair looks nice. Right? I have fabulous hair. Right? You can't write that down. Right? I know somebody, your wife or your husband, somebody told you that that's a strength. It doesn't relate to the market. All right. It doesn't relate to the market. So it needs to be related to the market. All right. Now, after we have a clear vision, a clear picture of what our strengths are, we spent enough time writing it down. Now we're going to move to step 4, formulate a trade plan that's built around your strength. I'm going to say it again. Formulate a trade plan that's built around your strength. Here's an example. Your strength is understanding market sentiment. From that, you've developed a strength in trading the open. Therefore, you should be putting size in, and you should have a trade plan that centers around the open. And for a considerable amount of time, you should be done by 11:30. Or you're in your trade for a long hold. And you lean into that. You just over and over. You don't say to yourself, I'm not trading the backside of the day. No. You can, but you reduce size, you take fewer trades, whatever you've got to do in the backside of the day to protect yourself. But you are really dialed in and ready to go. Why? Because your strength is market sentiment. You understand where we're going. And number 2, You're good at the open. Now, you could say, well, my strength is the close. I've got all the data for the day. I'm ready to go. After about 1:30 to about 3:15, 3:30, I absolutely rock. Great. Great. So this means that you're going to be dialed in all day. You're still going to watch the market because you need to see market sentiment. You need to see how the day unfolds. And then you're going to be ready to go. After the lunch session around 1:30, you're ready to crush this thing. You're leaning into your strength. That's where you put your size. If there's a move that happens in the day side, morning session, do you take it? Sure, sure. But you have to reduce your size. You don't chase after everyone. In fact, you can still say, no, I'm not taking that. I'm not taking it because I like the day to evolve, work itself out. I like to get that data to lean into my strength. All right. All right. Okay. So that's number 4. Number 5, what I want you to do is you're going to need to set benchmarks and time frames. Benchmarks and time. What do we mean? So you're going, as you write down your trade plan, there's not a single person that comes to me and I don't have a time and benchmark. You're on this trade plan for this amount of time, then you check back with me and whatever. We work you through that and we hit certain metrics. Well, that's the same thing you've got to do. You've highlighted it, you've got a plan around it, and then you track your progress incrementally. So it could be 30, 60, 90, whatever the case is. And as you go, you've got these benchmarks. What are your benchmarks? Your benchmarks is going to be data points or metrics that center around properly executed trades, not how much money you made, not how much money you made. It's going to be, all right, did I follow my trade plan? Did I lean into my strength? Did I execute these trades properly? I don't care how many trades you have in a day. Could be 5, could be 6. I guess let me correct myself. I do care that you don't have a million, right? Right, a million. Once I saw a video or I saw a guy say he's got like 100 micro trades in a day. That is the dumbest thing in the world. That's the dumbest thing in the world. That's a recipe to fail. I'm telling you right now. That many trades, that's a recipe to fail. So if you feel like you're trigger happy and you're, taking too many trades, that's going to make it to the weakness side, and we're going to lean into our strength to eliminate the weakness. All right, we're going to lean into a strength to eliminate the weakness. All right, and we're going to have benchmarks along the way. That's what we're going to do. All right. So set time frames. That's number 5. Set time frames and have benchmarks. So 30 days, snapshot. You're tracking yourself. 60 days, snapshot. You're tracking yourself. Don't just say, I'm going to do this and then don't have any tracking method. All right. Number 6, hold yourself accountable. Hold yourself accountable. How do you hold yourself accountable? Well, what we're doing right now, you use a community. You can post your action plan and post your daily update in our private channel there, in the Killer Wells Trade discussion channel. You're making it visible. Everybody sees it. You can get with me, right? One-on-one, that's up to you, right? You can post these things and have people hold you accountable, right? Now, think about me. I do this every day, right? Public, live. So you hold me accountable. I'm holding myself accountable. Why? I have to take the setups that make the most sense. I have to take the setups that are best. People are following and watching, and I've got to be right. And even when I'm wrong, you can see it. That's a level of accountability. I'm live. So you see my trade. I don't have to write it down. You're like, yeah, he took a loss there. Oh, yep, he's crushing it. Right. And I even give up some trades. I said, no, I'm not going to take that trade because it doesn't make the most sense. But then we take another one. So holding yourself accountable is an excellent way for you to lean into your strength because it forces you to work on it. It forces you to highlight it and can keep, working on it. All right. And then the last, number 7, is going to be mentoring. It doesn't have to be me, but get a mentor, get a coach along the way. Don't try to wing it. In my humble opinion, aside from using lagging indicators, aside from trying to pattern trade, the biggest problem I see with most traders is they try to go at it alone. And some of them have this selfish mentality. You know what I mean? They've got this mentality where they're like, I'm going to learn this. I'm going to keep it to myself. I'm going to make all this money by myself. I'm not going to tell anybody. I'm not going to, as if they are the only ones that understands the market this way. It's a really interesting mentality. So I'm telling you, don't go at it alone. Again, doesn't have to be the wealth wells, but you need someone that you trust, that you like, that you feel is has something you can learn, and that's consistent in the market. It doesn't have a flawed system. You need someone you can copy, you can learn from, and can coach you along the way. The best traders have an edge. What's an edge? Simply, it's just their strength. How do you lean into it? It's the trader's way of leaning into their strengths until they develop others. Now, until you find yours, highlight what you're good at right now, drill down on it, magnify it, and you'll not have any trouble getting to the next level. If you don't highlight it, then you will. It'll be complicated for you to get to the next level. Well, that's it. That's it. We appreciate you listening to this our Mindset Mondays. Every Monday we do a mental development during the low volume time frames. It's here to help you develop into a better trader, and it's important. Why? Because more important than the technical skills are the mental skills. The mind is the strongest muscle that you have, right? Strongest muscle that you have. And if you develop it, you'll go very, very far. All right. So let's recap the 7 steps. Sure. Number 1, complete a SWOT assessment. Number 2, highlight and detail the strength. Number 3, dissect why this is your strength. What makes it your strength? How long has it been your strength? All the ants or the peripheral reasons that it's your strength. Number 4, formulate a trading plan that's built around your strength. We gave the example of someone who likes to trade the open. Okay, your trade plan will be built around that. Doesn't mean you don't trade the backside, but it means that strength governs your risk to reward. It governs your position size, etc. It governs a lot of the frequency of trades, right? Number 5, set time frames and benchmarks. 30-day snapshot, 60-day snapshot, 90-day snapshot. Number 6, hold yourself accountable. Use the community. Post your action plan. Post your daily plan. Get the feedback. Make people hold you accountable. And then number 7, mentor. Get coaching. Training, development. Just gobble it up. Just get it. And work at it. Don't just go to YouTube University or sign up for trainings and then think, okay, do the work. Do the work. And give yourself 3 to 5 years. 3 to 5, you'll earn along the way. 3 to 5 years, and you'll crush this thing. All right? So I appreciate your support. Help us get the word out about the wealth wells, how it's changing the game out here, developing elite traders. Let's crush the rest of the day. I'll even take some questions on the backside here before we trade for the rest of the day, about another 5 minutes or so, if you have any questions. I'll take a few questions here, and appreciate that. Aramis said, "You're the best KD since Kevin Durant." Appreciate you. Yeah. That depends on you, Cristiano. How long until you become consistent? I personally think you start to see it around 3 years. That's my opinion. And this is a person who works at it every day, who reads the books, who practices. And when I say practice, I mean you're paper trading, you are practicing. And I can't go, I don't want this podcast or this episode to be so long, but I can't overstate practice. Most of you guys, if you look at your trade time, you are trading in live environment for money, for the purpose of making money, more than you're trading in a live environment to practice. Right? You're trading in a live environment for the purpose of making money. The time you're logging is more than the time you're trading in a live environment for the purpose of getting better. What's wrong with that picture? Well, you don't practice in live play when the game is on. You should have already done that, right? Kobe Bryant is on record, one of the greatest basketball players of all time, certainly one of my favorite ball players. Just his skill set is through the roof. But you know what Kobe is mostly remembered by is his work ethic. And Kobe's on record by saying that your practices should be harder than gameplay. Your practice is how you practice, and it should be so tough that by the time you get to the game, it's like, oh man, why? Because you're mentally conditioned. You've been doing it so much. So you need to get in practice, meaning you're going to have to put aside some days that and just say, I'm not making any money today, and just trade and do that over and over and over and over. And don't worry about the money. Just execute the trades. You do that, you're going to be good. How long does it take? It's different for every person. On average, a person that's very disciplined, it's going to take you about 3 to 5 years. Why? Because you've got to go through cycles of the market. You've got to get all of that mental garbage out of your mind. You've got to go through a few failed strategies and systems, and you've got to get your reps in. So that takes some time. It takes some time. What helps reduce that is coaching, a mentoring, a program, right? If you buy into it, right? Some people won't buy into it. They'll just plug into 50 discords and think they're going to copy trades. And you're going to look up, you won't have gone anywhere in 5 years. You will not have gone anywhere in 5 years. I've never seen a successful trader. I've never seen a successful trader not develop their own ability to execute properly. Every successful trader is plugged into a community. Every one of them. They're plugged into some kind of community. No doubt about it. On Wall Street, retail, it doesn't matter, right? Everybody. There's very few people who are just hermits by themselves making $1 billion. It doesn't work that way. They're plugged into a community. So I'm not saying, you always will need a community in some respects. That's just how trading works. There's too much going on in the world. But you have to have the wherewithal and develop your edge so that it can get you to that next level where you're consistently profitable. All right. So Kay Wilson is asking now, once you have this SWOT completed, what should our next action step be? Would this be just like our own personal roadmap, or should we be doing something more with it? All right. So let's go over the steps again. So you got the SWOT assessment. Then you're going to drill down on your strength, and I need you to dissect it. So you've highlighted your strength, one of them. Boom. This is the strength I'm going to dissect. Then you need to dissect it. Okay. What makes it your strength? You have to explain it. You can't just say, I'm good at this. Okay. How are you good at it? How are you good? Are you really good at it? Do you have any data to show that you're good at it? And what's the behaviors that show that you're good at it? Now you can see how tracking your trades and journaling is key. You don't know who you are until you write it down and you have metrics. You just don't know. So that's the next step. Then after that, number 4, you develop a plan. You can't develop a plan without the data. What you think may be your strength may not even really should be on your page because you're not that good. You just think you're good at it. You're not that good. And that can happen to all of us. So I'm putting myself right in there. It can happen to all of us, right? The only reason why I know when I see certain setups, and you guys know I've taught you some of these setups, and I'm reading them as well with you. The only reason why I'm so confident is because I know 9 times out of 10 what the market is going to do when I see this setup, and I take it and I know that setup is going to present itself 6 to 10 times throughout the day. And I'm still going to be able to miss a few trades because I've developed a number of strength in multiple setups. So break it down, dissect it, right? Why is it your strength? Get the data behind it. Look at your journal. All right. I can see that I'm doing well in this. Give yourself some time. Then you write a plan. All right. Based on my strength, I don't do good in the midday session. Well, duh, right? I'm talking about low volume, a lot of shakeout, fake outs. Okay. But man, I really crushed this thing right around that 10 to 11:30. I'm cooking. Okay. But let me just work this thing out in my mind. I still have to be prepared for the day. I still got to understand market sentiment. Okay. So this means that I'm going to really focus my size, my efforts to execute my trades in the morning session. And by noon, I think I'm going to be done. And I'm going to understand where we end, but I'm going to be done. Or, man, I'm really good with sentiment. And I'm telling you, man, most of the time this thing goes where I say I think it's going to go, but it just takes me a little longer. Okay, great. Cut your target in half, right? Cut your target in half. Formulate a plan around that, right? Cut your trade count in half. Man, I'm really good, but once I start getting over 14 trades, then just stop going to 14 trades, right? 7 bangers, right? learn from my example. If you don't take anything else from me, you should take the discipline that I have. That is one of my strengths. And I'm going to be honest with you, it has only come because I've had to develop the discipline in other verticals, and it has mapped over into the financial world, the financial space, and in the market. I've had to develop the discipline, and that's an edge as well. So once you identify it, then you're going to follow these 7 steps, and you're going to lean into it. Does that answer your question? Okay, gotcha, gotcha. All right. Well, let's get back to the market, folks. Like I said, it was a pleasure chatting with you today. Hopefully, this was beneficial and helpful for you. Leaning into your edge. What is your edge? How do you lean into it? And then what do you need to do to keep developing it? If I outline those tips for you there, hopefully you took some notes. This will be available on all your platforms later. But I'm going to crush the rest of the day. Say it with me. I'm coming out the day green. KD signing out.